Good morning, ladies and gentlemen. This is Greg Michalowski, and this is a Monday, March 8th, 2010 New York opening Forex report brought to you by FXDD. Let me remind everybody this report is for educational purposes only. Anything expressed in this report is solely uh, in the opinion of the presenter. There's not any recommendations to trade, just educational biases as far as the bias from a technical perspective in the different various currency pairs. Trading FX is risky, and traders should only trade capital which they are prepared to lose. With that said, you can see our disclaimer in this area right here. Please take note of all the stipulations within that disclaimer. Well, getting off to this week, we do have the euro continue its move to the upside after last Friday's unemployment report, which showed a little bit more strength than what the market was expecting. This is leading a flight into some of the riskier currency pairs. Including, we've seen some rebound in the euro. The other thing that is happening through over the weekend in Europe is that the Greece situation gets a little bit better. There's some comments from Francis Sarkozy in regard to helping the Greece from the EU's perspective, and this helped give the euro a little bit better tone. We have come off of the highs here and corrected towards some key supports levels. So why don't we start off taking a look at the euro versus US dollar. We'll start off with the hourly on the hourly basis, and on Friday's weekend report, we talked about this 136.54 level that the market had to get through that level on the top side in order to continue its move along the what we call the bullish highway, the move to the upside. We are above the 100-hour moving average. That gives a bias to the upside for the euro versus US dollar, and the next target would have been this 54 level, which it corresponds with these highs you can see going back in time, and lows. There's some lows here that held and the market fell through. We had some consolidation around the area. Then when the market moved higher, when it broke through, we corrected up to that level. We corrected up to the level, corrected up to the level. When the market came through the next time, it went flying through, and then went flying through on the downside. Next time we did the same thing, came up to the level, found sellers, came up through it, found resistance, found resistance, found resistance, found resistance, so on and so forth. So today, the market moved through that level and boom, right up to the top side. And the other area we were looking for is a 136.91 level, and that was this high at this period right here. This was just the high corrective for this 2-week period, and that becomes a level of resistance. When the market broke through that level on this day last week, the market continued in its direction to the upside and then came down, held it as support at this area. So you can see why these levels become of importance in trading, and lo and behold, the market came up to that level after breaking through the 54 level, corrected, had this one spike up here, the failure above that current line, 136.91 with a high of 137.04, has started this correction to the downside. The market has gone back down through the 54 level in early New York trade here, or as the market comes in, the market's going to have a decision. I'll go to the 5-minute chart now. Okay, what does it want to do at this 54 level? Does it want to stay below it? Right now we're showing a correction to it and move back down. We also have the 200 bar moving average here on the 5-minute chart, which comes at 58. So really traders have this area to sell against with the hope that perhaps the market further corrects to the downside. The market moved up Friday from the lows at 135.31. A correction of 38.2% retracement has been made at 136.38. So right now, the decision becomes, all right, do we stay below this level and continue and try to test the 36.38 level again on its way down, perhaps toward this 136.17 level, or does the market move through and this is enough correction and we start to move to the next upside? So it's plain to see. It's right there in front of you, folks. That's what we're seeing in the euro versus US dollar. Take a look at the sterling versus US dollar. The market has been correcting off of this last move to the downside. This is a January high, the January low, 38.2% retracement. Could bring this sterling up to the 134.54.21 level. We are off of the highs today, however, and taking a look at the chart, the market is actually down on the day. The close on Friday was 151.44, and the market currently trading at 151.18 and below the 200-hour moving average. We broke above We broke above it here in earlier trade today, moved up toward this high, which was the an area back actually this 5202 level was the bottom of this um, gap that we had from a week ago Friday, and the market went up to 151.94. Could not get within that gap here, this gap area right here. So that gives me a little pause for bias on the downside for too much. In that we still have that gap to fill, and we get so close, and then go so far away. But in order to get there, we're gonna have to get above this 151.38 level, which is the green line in the chart, which is a 200-hour moving average. To put a Fibonacci from Friday's low to the high, and we can see that corrected around 38.2% as well. Get above the 151.39, and we have a chance to head back up toward the high to fill in this gap between the 52.02, 52.36 level for the sterling versus U.S. dollar. But look for sellers against the 200-hour moving average here, with a possible move back down below the 151.16 level down to 150.92, and perhaps even all the way down to the 100-hour moving average below. We will see. The market has another decision to make as New York enters the field of play here today. Looking at the 5-minute bars, the 100 has started to come down. The 200 starting to converge with the 100 at the 150-155 level. So be looking for resistance against those levels as well on the top side here today in early trading. Take a look at the dollar versus yen. What is significant here is the 100-day moving average at 90.15. We came down, tested that level. Actually, the low was 90.14. The market started to move back higher, trading at 90.36 currently at the moment. Taking a look at the hourly chart as a retracement. Let's get rid of this right here. Boop, boop, boop. Up. If you take Friday's or Thursday's low and do a Fibonacci retracement up to the highs, the retracement level comes in at 89.17. We got to put a horizontal line at 90.15. Why? That's because that's the 100-day moving average. It's going to be a key moving level that we're going to be watching here today. So we have to stay above that level in order to move the market to the upside for the dollar versus yen. And so far we are. So let's keep that level in mind on the chart. Now taking a look at the 5-minute chart, we are in this consolidation phase here. We did have this nice bottom here at 90.35 here for today, and the market was able to break through that and move to the downside. But we did find that support at 90.15 level, now moving back up toward our 35 level here where we had the floor here. So just like all our other currencies, New York's got a decision to make. Does it want to go higher or does it want to go lower as we enter into the New York fray? Finally, I thought I'd take a look at the dollar versus Canada, take a look on the hourly chart, and we have a nice floor here developing here in the dollar versus Canada, making things pretty clear. Look how many hourly bars we have down there here today that we tested at the 102.60 level. The low at this bar right here was 102.59, but you can go through and you can actually see for yourself how many times the market has gone down and tested the 102.60 level a number of times. So are we going to move higher in the dollar Canada here and continue its move to the upside? Where is the resistance? 103.07. That was the initial low that came down to here. The 100-hour moving average coming down at 103.14 here as we speak on the downside. So right now, the dollar Canada has the potential to move higher, especially off of this this floor at 102.60 level. Let's look at the 5-minute chart. If you want to be a little bit more patient, you can buy against the 100 and the 200 bar moving average here down below at 71 and 75. Look for a move down into the upper 70s and put your stop below these two moving averages and see if we get that push to the upside. We'll be watching that very closely here for the dollar versus Canada. That's my morning report. We'll talk to you a little bit later. There's no economic data coming out here today. UK's Barker speaks later on this morning. What she says what may have significance in the market, so pay attention to that. Again, no U.S. economic data. At 8:15, we have Canadian housing starts. The expectations for a rise to 190K, so that will be the only economic data coming out this morning. Talk to you later. Bye-bye.